Bitcoin is trading near $78,000 after touching $79,400 earlier today, leaving $80,000 as the immediate test heading into the weekend. This is not just a round number. It is the level where the current rally either proves itself or stalls, and it is arriving just as market depth is about to shrink. The scale is striking. Bitcoin has flipped meta to become the 13th largest global asset at roughly $1.5 trillion. This is a major macro asset testing a major threshold with thinner weekend liquidity looming. The question on Friday, August 21, 2026 is simple: can Bitcoin hold above $80,000 when fewer buyers and sellers are there to steady the market? The move did not come from fresh retail demand alone. Bitcoin has recorded its best week since 2023, and much of the acceleration is short covering. Traders who bet on lower prices have been forced to buy back their positions as the market rose against them, and that forced buying feeds on itself. More than $4 billion in bearish bets has been liquidated during this three-day rally. At the same time, a US Treasury liquidity push has given risk assets a tailwind. That combination explains why $77,000 was broken so quickly and why $79,400 appeared almost without pause. Corporate holders are feeling it too. Strategy's Bitcoin position has swung to a $1.4 billion gain, according to Friday's reports. The spillover is also clear, with XRP spiking 39% to above $1.40, a 3-month high. Weekend liquidity is different. Institutional desks and market makers scale back, order books become shallower, and the same size trade can move price far more than on a weekday. That cuts both ways. If buyers stay aggressive, a thin market can make $80,000 fall quickly. If profit-taking begins, the drop can be just as sharp because there are fewer resting bids to absorb it. That dynamic matters more now because the market has already traveled so far so quickly. A breakout on low weekend volume is a weaker signal than a weekday breakout with real participation. The immediate test is whether Bitcoin can close a session above $80,000. If it does, forced buying may extend, and market chatter already points to $85,000 as the next upside marker. If it fails, much of this move could unwind because so much of it was built on leverage. The risk of a bull trap is real. A push above $80,000 that quickly reverses could trigger another cascade, this time from late buyers rather than shorts. For today, watch not just the headline price but how the market reacts around the $79,400 to $80,000 band. Volume, order book depth, and the speed of any rejection will tell you more than the ticker. The big picture is that Bitcoin is being driven by a liquidity event as much as a fundamental repricing. Thin weekend conditions can exaggerate both the breakout and the breakdown. The key level is $80,000, but the key context is the shallow market behind it. Do not just ask whether Bitcoin has crossed $80,000. Ask whether it can hold that level with conviction into the weekend close. That is the difference between a sustainable move and a short squeeze that burns itself out.